Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody guys, let's take a look on the gold market. So we have to acknowledge that market turns to the second stage of our global long-term trading plan, which calls us the major retracement. So as soon as the major target has been reached on a monthly chart, on a weekly, on a daily, this is the XOP as you can see, it's 1452 area. So all targets have been met, starting from the monthly down to the 4-hour time frame chart. So on a daily chart, we also have got the butterfly pattern has been completed, and that could become the starting pattern of the retracement. On the monthly chart, actually, we also have the butterfly, and with the touching on the 1450 area, market has completed the minimal target of the reverse head and shoulders on the monthly chart. So currently, we could say that this pattern can't fail anymore because the minimal target is done. On the monthly analysis, we talked about the further targets that we have above the market, but that is really too long time perspective. So currently, we're coming to the second stage, which is the moderate retracement, and the result of this stage should be twofold. First of all, we still intend to trade market to the downside to make some trades on the bearish side. Second, we should be, by the end of this journey, at the point which will be appropriate for a long-term bullish position on the gold. So that is two aims that we have with this retracement. You could trade this retracement differently. As we talked about on Friday, there is no necessity to be hurry up with taking the short position. If you prefer to take short-term trades that lasts for 1-2 days, you could try to trade it right from this moment, trying to ride first on the first downward action, then in the retracement trying to take another position. If you prefer to trade on a daily chart, on the 4-hour time frame chart, you could wait for a more extended bearish pattern that should be formed, and particularly speaking, we see here potential for head and shoulders. So that could become the left shoulder, head, right shoulder should be here. So you could skip, for example, the first drop to the neckline. When the market will start to form right arm, you could try and take the short position somewhere around the same area, 1425, but when the pattern will be totally in place. So that depends on your trading style, its personality, risk management, so it's very personal. Speaking on the current situation, here is what we have. First of all, as market has completed all the targets, we have a bearish engulfing pattern right at the top. That is also combined with, as I call it, two-session bearish grabber. So this combination of the two side-by-side sessions have the same feature as the single candle of the bearish grabber, but it stands for two sessions in the market. First, turn trend to the upside, to the bullish one, and on this next session it turns it in opposite direction, turns it back. So in fact, it has the same feature as the single candle grabber, as I call it, two session bearish grabber. This grabber suggests the taking out of these lows. So it means that market with this action should drop at least somewhere to the 14 even area. So that's the first point. Second point, we also have this engulfing, which also suggests the downward action. And take a look. It means that the nearest target that we could get stands somewhere is the 14 even, 1380 area, because that is the confluence. It probably will be also accompanied by the daily oversold when the market starts dropping. And the first level that could be reached stands around 14 even. So that's the area of the first destination point that should be reached. As we keep in mind the possible hand shoulders, it also should be somewhere here. It's probable neckline of this pattern. So that's the area that we treat as the first destination point. In general, the technical setup for trading stands relatively simple for us because we do know the crucial point, invalidation point, which is the top. Because while market stands below the top, we have valid engulfing, we have valid grabber, and until this top, the bearish stop will be valid. We know the targets, so now we need to find the levels where we could go short. On the 4-hour time frame chart, we also could recognize the bearish divergence. You can see it's very clear with the MACD indicator. On the hourly chart, we have minor ABCD in progress. Market hits the OP on Friday. XOP stands at 1410. That is the next destination point. With this pattern, its most bright thing is very fast acceleration of the CD leg. So OP target mostly was done just almost with the one candle. So it's very fast action. You could compare the speed of the AB leg and CD leg. So CD is much faster. It means that sooner or later the market will proceed lower to the XOP. With the bounce up, we have two levels to pay attention to. The first one is 1428. It's nearest minor retracement, but it's already has been tested with this spike. Next one is a conference resistance around 1432 area. So that is the primary area to watch for, since the fast acceleration was the acceleration was really fast here. Market is not at the oversold currently, not at the some major support area. Yes, here we probably could find some supports. So from this low to this top, this will be somewhere around 50% probably. It's intraday support, but the daily supports has not been reached yet. So because the nearest level stands right here. From this low to this top, yes, maybe this is 30% support. But anyway, based on an engulfing pattern, some minor pullback here should happen. So, and the first level that we will keep an eye on, I suppose, should be 1430. So that's the point that we'll keep an eye on for possible taking the short position here. First target will be at 1410, and then we will see what will happen next.